The ongoing macroeconomic challenges, deflated tech stock prices, a letter from an activist investor, and most of the stocks were a sea of red. Big tech companies have joined the global layoff season. Adverse market conditions continue to bash profit margins and stock prices. The companies are also facing calls from at least one wealthy activist investor to reduce excessive headcounts and pre-employee costs. A report says 6 in 10 companies will likely lay off employees in 2023, and 61% of business leaders agree that their organizations will likely have layoffs in the new year. Hello and welcome to VARINDIA News Hour. As the global financial situation weighs on wallets and portfolios, big names like Meta, Twitter, and Amazon have all initiated layoffs in 2022. November tech layoffs alone have surpassed 45,000 heads, with the largest firms trimming the fat by 10,000 plus heads each. Some companies that go private disappear from public view, but not Twitter. It's hard to think of another corporate takeover whose aftermath has drawn much of the media attention, with many details leaking out. And that has surely complicated Elon Musk's life, for instance, scaring away advertisers and possibly making it harder to recruit employees. Even so, Musk's view that it would be easier to restructure Twitter as a private firm, expressed in an April text to Twitter's then chair Bret Taylor, was still probably right. After all, while we have heard a lot about untrammeled nature of Musk's management style, we know little about what's most important, the state of Twitter's business, such as its current level of revenue, expenses, and debt levels. Yes, Musk borrowed $13 billion in debt that carried very high interest rates. It's possible, though, that he will use his latest sale of Tesla stock this week, raising somewhere around $3.5 billion to pay some of that off. That's one interpretation of his tweet, that is, at risk of stating obvious beware of debt in turbulent macroeconomic conditions, especially when Fed keeps raising rates. The bottom line is that, without knowing the key financial details, we can't assess the state of play. As reported by the information based on the snippets that have been reported, such as ad revenue falling in some regions by as much as half, you can guess that lower revenue has largely offset the cost savings from employee cuts. It's also likely that at current valuation levels, Twitter's equity has been all but wiped out. Assume that its revenue is running at an annualized level of $4 billion now, down 20% from 2021. Then apply to that number the average revenue multiple at which Snap, Pinterest, and Meta platforms are trading. That implies Twitter's enterprise value is just about $13 billion, equal to its debt level. If Twitter was still public, that would be clear as day, spotlight the troubled state of the company. But the value of the equity doesn't matter much right now. Musk is surely playing the long game, as one might expect from someone whose ambitions include building a ship space that can fly to Mars and revolutionizing the car industry. While his chaotic transformation of Twitter is generating lots of noise in the news, assessing this situation requires time. Let's see what things look like in a year or 3. It's too early to judge whether Musk's takeover is succeeding. Let's look into today's headlines in VARINDIA. Government and RBI taking coordinated efforts to contain Chinese loan apps, says Finance Minister. Finance Minister Nirmala Sitharaman said in Rajya Sabha that the government departments and the Reserve Bank of India are taking coordinated steps to check Chinese mobile apps offering easy loans and cheating people. The minister also said action has been taken against these apps. She also said that a lot of apps that have been badly misused have also been brought to the attention of MeitY. Meta takes down CyberRoot Risk's 40 fake accounts. Social media giant Meta has taken down over 40 accounts operated by Indian firm CyberRoot Risk Advisory, allegedly involved in hacking for hire services. Meta also took down a network of about 900 fake accounts on Instagram and Facebook operated from China by an unknown entity. According to Meta, CyberRoot used fake accounts to fabricate personas to gain trust with the people they targeted around the world. These personas impersonated journalists, business executives, and media personalities. Foxconn to accommodate 60,000 employees in Tamil Nadu. iPhone manufacturer Foxconn is reportedly building hostels for about 60,000 employees near its manufacturing facility in Chennai as it aims to boost the production of Apple devices. The first facility will be able to accommodate 20,000 people and is expected to be ready in the next 10 months. Apart from the hostels, the company is also constructing new manufacturing facilities inside its Sriperumbudur plant. RBI directs Razorpay to stop onboarding new merchants. The Reserve Bank of India has asked fintech giant Razorpay to pause onboarding of new online payment merchants as the central bank requires the company to make certain changes and provide more information before it is granted the final payment aggregator license. Razorpay is expected to submit a report to the RBI early next week, and once that is approved, the company can continue onboarding new merchants. Railways should adopt technology for convenient transportation services, says President Murmu. President Murmu has said that the Indian Railways should adopt the latest digital technologies and explore new avenues to add advanced features for safer, time-saving, more convenient and high-quality transportation services. She said that Indian Railways has to play a key role in bridging the gaps and realizing the dreams of an exclusive Atmanirbhar Bharat. That's all for now. Please like, share, comment and subscribe to VARINDIA News Magazine. You can download the VARINDIA app from Google Play Store and Apple App Store for the latest news and updates. Stay tuned. Thank you.